Hey, how's it going, everybody? It's Mike Weber here with your real estate market update for the beginning of June 2019 for the Los Angeles County and South Bay Beach Cities areas. First off, I just wanted to take a moment and thank all of the new subscribers to the channel, as well as the handful of people that reached out last month for assistance with either buying or selling real estate in the area. I really appreciate that very much. And I'm always a phone call away to assist with anything real estate related, whatever it might be, anywhere here in the Los Angeles area. So feel free to give me a call or shoot me a text anytime if you have needs or questions. So let's jump in to the analysis for this month. I wanted to start out and talk a little bit about interest rates because they have trended down. We're looking at the 30-year fixed mortgage rate average according to Fred. And as you see, it kind of broke the 4% barrier. We're down at 3.99% average. And there's a few important things to take away from this. Now, first off, rates are falling even though the federal funds rate has remained the same because markets are pricing in what they believe to be a future rate cut by the Fed. And I believe that to be totally accurate. In fact, I would suspect within the next 6 to 12 months, the Fed is going to quickly be on a path to lower rates back to zero where they were for an extended period of time. I believe the longest in United States history at 0% for around 8 years. Now, these low rates that existed for a very long time certainly helped to cause a huge boom, a lot of speculation in the real estate market as well as the stock market. And so the interesting thing to take away is that although we did see a little bit of boost in the housing market since the end of last year as a result of rates dropping a whole percentage point, that is really starting to slow down, and we're really not seeing any additional benefits of these, again, very low rates that we haven't seen since all the way back in mid-2017 in the housing market. And so once the Fed gets to zero or closer to zero, even when they were at zero, as you can see back here, the lowest that mortgage rates really got in the last 5 or 6 or 7 years were around 3.5%. And so even if the federal funds rate continues to come down and gets back down close to zero, I would only suspect mortgage rates are going to fall maybe at most another 0.5% or so from where they're currently at right now. And so if we're not seeing any additional benefit or help in the market as a result of the rates already dropping a full percentage point in the last 3, 4, 5, 6 months, then I certainly think that that's an indication that the market has leveled to some extent, and I don't believe that a slightly lower mortgage rate is going to stimulate the market enough to cause additional sustained price growth. So let's take a look and see what's actually happening in these local markets. So we're going to look at Los Angeles County first. And what we see here is that year over year, median prices are stable at 0%. So this is definitely interesting. I think this is the first year over year at 0% that I've seen for a monthly data point as long as I can remember doing these videos. Now, the interesting thing to see is that for the last several years, every year we kind of go up, kind of peak in the middle of the year, say May, June, July, and then we kind of fall a little bit, and then we go up some more, kind of peak May, June, July, August, start falling, right? Well, as you see here in June 2018, we kind of started to fall, and here we are mid-year. This should be kind of where we're starting to peak for the year, and what you see is that we're at the exact same median price point that we were a year ago in May 2018. So it's highly unlikely that prices are going to rise, maybe slightly, but anything substantial just based on the patterns that we see over the last several years. So most likely prices are going to crest and peak, right around this time of year, maybe next month, maybe this month, and start trending downward, which means we are not going to see any real price growth over what happened last year, which means the market is relatively stable at this point. So this is kind of the first indication of the market really stabilizing that I've seen in the last several years, obviously, because we've had so much price growth. And it seems clear that we've maybe hit a top, hit a peak, and the market may sustain itself at this sort of level for an extended period of time, or it may start coming down Obviously, it's very hard to say, and there's a lot of factors that would go into that. Now, let's take a look at the supply of inventory on the market. And that really didn't change too much compared to the last video. Now, it is up 28.6% year over year, which makes sense. We're at about 3.6 months supply. And in May of 2018, we were at 2.8 months. Obviously, it's trended much higher than it was last year, and certainly a lot higher than 2017 as well. We are above 2016. I was suspecting it would get up to this kind of 2014 level rather soon, but we haven't hit that yet, at least in Los Angeles County. However, in the South Bay, you'll see a different situation, which we'll get to shortly. So let's move on, and we'll take a look at closed sales. Those are actually down just 4.9% year over year. Now, again, as I've shared in past videos, this is comparing to a relatively soft year for 2018 compared to some of these other sort of years that we saw previously, but still just down a modest 5%. So prices are stabilizing, rates are lower, and so for that reason, this is still spurring a lot of buyers to be able to get out there and purchase, maybe afford a slightly more expensive home than they could have 6 months or a year ago because of the 1% drop in interest rates. That all being said, we're certainly not seeing that speculative fervor in the market that we saw for so many years. Obviously, investors are savvy to the fact that they're probably not going to see huge price gains. Flippers and would-be investors that want to get in and get out are going to have to get a really, really substantial deal in the initial purchase price on a property for it to make sense for them to invest a bunch of money, including all the holding costs, to try to turn around and sell it in a market where prices really aren't rising anymore. And so for that reason, a lot of the people that are currently buying are most likely really the end buyer that wants to buy the home, that has to qualify. And for all of those reasons, that's why we're seeing this stabilization, as prices have gotten too high for that end buyer to be able to afford across the board, generally speaking. Now, let's take a look at the South Bay and see how that compares to Los Angeles County. What we see there is that prices are still up 1.8% year over year. Of course, the sample size is much smaller, so the graph, is a lot more erratic compared to Los Angeles County as a whole, but certainly we're seeing a similar trend. We're not seeing any sort of massive growth. I mean, the peak was in June 2018. We kind of, hit a peak again here in April, which was really no stronger than the peak in June of last year. And so now we're kind of trending down. So it's a, kind of an up and down pattern, but it certainly doesn't seem to be rising, at a 10 or 12% per year rate as it did for such a long time. Now, if we take a look at supply of inventory, we do see a breakout here, even more so than in Los Angeles County. Now, and this is kind of something that I predicted and suspected for a while now, we are at 3.2 months supply, definitely going back to the high point here in 2014. And certainly higher than anything we've seen all the way going back to that point. Now, I was suspecting that this would go higher if mortgage rates, continue to come down, if the Fed lowers the federal fund rate. It'll be interesting to see if buyers continue to absorb the supply that's kind of on the market. Definitely showing a breakout pattern, but doesn't seem truly concerning yet, unless this really grows and, goes well beyond what we've seen back here in 2014. And finally, let's look at closed sales for the South Bay. And what we see is we're up 3.7% year over year. Again, we're comparing to a relatively soft year in 2018. So we're seeing about the same amount of activity that we saw pretty much last year, and just another indication of kind of a stabilized or flat market across the board. So yeah, hope this information was helpful and useful. If I can assist you with anything, don't hesitate to reach out directly. Really appreciate you taking the time to watch the video, and I'll look forward to seeing you on the next one. Thanks so much.